Hello everyone, I Karishma Suvarnikar welcome you all on behalf of MI Capital Services to our new series on UAE corporate tax simplified for you. We bring to you a series of videos simplifying the proposed UAE corporate tax for your better understanding by sharing our insights on the same. So let's start without wasting any time. Today, we will discuss the concept of tax groups under the proposed UAE corporate tax as explained in the consultation document. Now, the concept of tax group is essential for companies with multiple licenses in the UAE. Many companies operate as a group of companies as a single unit having the option to be a tax group. Not only reduces the compliance cost but also helps reduce the effective tax rate of the company. Now, the consultation document talks about two types of groups. Number one is the tax group. Now, under the tax groups, there's one registration of the tax group files a single written as a group. For this case, 95% of the group companies must be commonly owned. That is, it is essentially wholly owned, and the other is the group. Now, group who can take the benefit of the transfer of losses between group companies. However, in this case, each entity may have a separate registrations and file the returns accordingly. For the group, there must be 75% of the group companies which must be commonly owned. So these are the two types of groups which are being explained in the public consultation documents. Now coming on to the tax group, who is allowed to form a tax group? As per the consultation document, we can see that the following are the conditions for being part of a tax group. Number one, parent holds 95% shares and voting rights of the members. Number two, all the members must have the same financial year. Number three, parent company or member of the group should not be exempt from corporate tax. Number four, parent company or member of the group should not be a free zone, that is taxed at the rate of 0%. And number 5, the parent company and the member company must sign a notice and submit it to the FT. Now, the branches of the parent company or subsidiaries are also allowed to be part of the tax group. Now, what does it mean to be part of a tax group for the parent or the subsidiaries that allow them to be part of the tax group? The parent company is responsible for all the administration and payment of the tax, and the parent company must consolidate the financials of the group, and the intercompany transactions must be eliminated. And lastly, all the members of the tax group, including the parent company, will be jointly and severally liable for the corporate tax payable. Thus, the UAE corporate tax allows full consolidation for the tax purpose known as the tax groups for essentially wholly owned group companies. Now, for the group companies that do not meet the minimum 95% common ownership requirement or that do not form a tax group, the UAE corporate tax will allow them to transfer tax losses from one group company to another group company with profits provided certain conditions are met. Now, what are those conditions to transfer losses between the group companies? Let's have a look at that. So, these can be done with the help of the following conditions or only when the following conditions are met. Number one, 75% of the company must be commonly owned. Number two, the company is not exempt from the corporate tax. Number three, the company is not a free zone company with 0% corporate tax benefit. And number four, the total loss that is offset will not be more than 75% of the taxable income of the company receiving the transfer. So we can see that these conditions are not as strict as the tax group conditions. Moving on to group relief. In the absence of the targeted tax rules, undertaking restructuring or reorganization within a group could result in the tax liability arising on the realization of gains on assets or liabilities being transferred. Recognizing the importance of allowing the businesses to reorganize themselves without triggering an unnecessary tax charge, the proposed UAE corporate tax regime will allow for an exemption or deferral of corporate tax in respect of the transfer of assets or liabilities between members of the group. Now, whether gain or loss to be accounted for transfer of assets or liabilities within the group companies, says in the case of a companies that are at least 75% commonly owned, any transfer of assets and liabilities can be transferred at net book value, and thus the gain or loss on the same will not be transferred provided the assets and liabilities being transferred remain in the same group for minimum 3 years. If any of the above conditions cease to be met, that is 75% commonly owned, not transferred at net book value, and not maintained for minimum period of 3 years, then the period in which it happens or the period in which the conditions cease, the gain or loss needs to be considered in the transferor's tax return. Moving on to the last topic for the day, restructuring relief. Now, restructuring relief exists for companies that are acquired, merged, or restructured, and an exemption for the deferral of corporate tax payment will exist for these restructuring. Now, in the case of an acquisition, the acquirer company will continue to the transferor's existing tax basis in the transferred assets and liabilities. No gains or losses need to be accounted or to be taken into account, as the tax net book value need to be transferred. That is, the transferor company will transfer its assets and liabilities to the acquirer company at the net book value, and thus there will be no gains or losses that are to be accounted for. Now, any restructuring relief will be clawed back if within 3 years of the restructuring there is a subsequent transfer of the business to a third party. That is, any gain or loss that would have arisen upon the initial transfer would need to be calculated and included in the tax return for the tax period of the third party disposal. From the above, we can get a bit more clarity on how the tax group companies will be treated under the new proposed UAE corporate tax regime that is to be implemented. In the next video, we shall discuss about the transfer pricing and administration under the proposed UAE corporate tax. Till then, stay tuned and do like, share and subscribe to our channel to never miss any of the upcoming videos, and for any queries or doubts, do feel free to reach us. Our website and contact link is shared in the bio. Thank you and